Hello, everyone. Thank you for joining our panel. We have a global panel here, as Rob said. And I think what I want to do is start just basics, talk a little bit about money laundering. I think that if any of you watched the hit show on Netflix, Ozark, where Marty Byrde bought a casino in order to launder money for the Mexican drug cartel. That I think we all understand the basics of land-based money laundering. But I wanted to tap into Jennifer, who's here from Sightline Payments, and also Warren. Will give you a chance to chime in. Can you talk about money laundering and fraud on the digital side of the business, online gaming and sports betting, how it happens, and what are the key issues that you guys deal with while you're in the trenches day to day? Jennifer, we'll start with you.
Sure. So good morning, or good afternoon, everyone. Jennifer Carlton, the Chief Legal Officer for Sightline Payments. And I first want to dovetail off of what David said. So in Ozark, the main character first moves to Missouri, and he's looking at businesses to buy in order to launder money, right? And so what does that mean exactly? You have to get basically dirty money, and you have to somehow turn it into money that you can put into a bank account. You have to be able to explain it to the IRS. You have to be able to explain it to your bank. So that's what money laundering is, right? So from a brick and mortar perspective, the first thing he does, he doesn't go for a casino first. He buys a hotel. Why does he buy a hotel? Because it's in the middle of the Ozarks. He can say, we just had a lot of customers, right? You can put money in and take it out, and there's a reasonable explanation, right? So that's what you have to think about for money laundering. When you have an authority sort of looking over your shoulder, you have to come up with ways in which you can have a reasonable explanation for why this money is there, right? Other than you're taking money from a drug cartel. So for brick and mortar, casinos are an obvious choice, right? Because not only are you taking money in, but presumably you are also giving money back to patrons who win, right? So, or they put their money in and then decide not to wager, they're not having a good run of luck, they take money out. So that's why casinos have been an obvious target for money laundering, and why you have Title 31 and the Bank Secrecy Act and all of these regulations for brick and mortar. But for online, it's less obvious, right? So how do we think about money laundering from a digital payments perspective? Well, of course, people are endlessly creative in ways that they can also put money in and try to take money out for digital. So if you have your big bag of cash and you want to somehow put that through a digital casino or through a sports book digitally, you might, for example, go and buy Visa cards or MasterCard, so those gift card kind of things. You would then use those to load a wagering account, make a couple of bets, and then pull that money out. And from a digital payments perspective, you can see those behaviors. You can see where you would have a patron going to a pharmacy and buying a $1,000 gift card, a $1,000 gift card, a $1,000 gift card, loading an account 10, 20, 30 times a day. Well, again, there you're back to suspicious activity that would trigger a Title 31 and a filing with your various regulatory agencies. So that's how to sort of conceptualize AML from a digital side.
Warren, why don't you chime in on some insights?
Yeah, I think Jennifer's given a very comprehensive view of the background and how it is. Essentially, it's third-party deposits. That's where it stems from. It's non-reloadable prepaid cards, gift cards, as Jennifer referenced as well. So it's anonymity. So if you've got a mechanism to try and actually get a deposit using an anonymous fund sourcing, then that's really what's going to go and drive this. I guess one of the things is I missed the earlier session, unfortunately, trying to get a handle on how big this problem is. So I don't know what was said in the earlier session, but from the limited research that I did from an online perspective, I think it's good to understand how big is this market. So I understood that it's around, I think Grand View's research says that global gaming, online gaming, is about 63.5 billion. So I hope that correlates with the earlier session. Similarly, the actual gaming within the US, land-based and online, is comparable. It's that sort of figure. you go and have a look at PSD2, which was implemented within Europe. That was actually to go and improve consumer choice, make it a lot more seamless, but also try and tackle fraud. Fraud was around about 3% or so, which is what they were trying to tackle. So that just gives you, you were saying about how big is this and what's the size of the problem. Hopefully my figures correlate to the earlier session. But that's the sort of area that we're trying to tackle. The fraudsters do exist, and that's what you need to try and combat against these anonymous third-party depositing methods. Predominantly, gift cards is a key source of that.
Interesting. Ismail, I want to go to you here now. You have a cutting-edge technology that is monitoring and looking at the illegal market. So maybe now's a good time for you to talk about exactly what you do and what are you uncovering. For example, when we prepped for this call, you said, I always understood that the UK has limited to no illegal wagering, but you said, actually, there's a lot of illegal wagering in the UK. So why don't you educate us on kind of what you're seeing, what your technology uncovers, and how big of a problem this actually is?
David, thank you. First of all, can everyone hear me okay? So I'm Ismail Vali. I've built a platform called YieldSec. YieldSec looks at not just the illegal market, but the overall marketplace itself. So we look at all of the activity taking place in a jurisdiction. We were the people who came up with the phrase the marketplace. So rather than just referring to the industry all the time, we look at all of the betting, gaming, and lottery activity in any jurisdiction. So in the UK, for example, we did some work over the World Cup. We established that there was at least a 2% black market in the United Kingdom. Now that's low, but that's surprising because the United Kingdom's had legal gambling for 150 years, and we've never had that kind of scorched earth period where prohibition meant the black market was able to gain a foothold. In the United Kingdom, where the black market are going towards, and this is interesting to see, what activity are the black market interested in the United Kingdom? They're not interested in sports betting, they're not interested in casino necessarily with your mainstream customer, because that customer has 2,500 licensed options out there to choose from. And it's expensive for them to get PPC and advertising out there that would get them that kind of access. What the black market in the United Kingdom is interested in is going after children and self-excluded customers. So those are their core routes of concern. When it comes to handling the payments, they're putting those payments through as Uber kind of eats meals, they're putting them through as Uber delivery drivers, they're putting them through as anything other than standard gambling methods. So they're always miscoding, they're always out there putting payments through as we're not going to allow ourselves to be kind of held up for this is the activity we're taking part in. So,
Christina, you're very active in the LATAM markets and other markets in Europe. Can you walk us through what are some of the best practices and if there are some interesting stories you can share about what I perceived as the somewhat wild west of LATAM? Obviously, Ozark colors that because he was laundering money for the Mexican drug cartel, but I would like you to share some of your LATAM experience and some of the insights you've gained in kind of the regulatory framework down there.
So how much time do we have? No, so it's a common misperception that it's the Wild West. Obviously, it depends on the countries, but you have well-regulated and established gambling jurisdictions like Colombia, for example, which took on the Spanish model. Not particularly proud of it, but they took it on. So you would, in terms of AML, you would have regulations in pretty much every country. The biggest issue is over-regulation, in fact, because it pushes, as it does all over the world, it pushes operators and customers over to the illegal side. That's where you come in. But I've seen, so in terms of best practices, you wouldn't see anything different from customer due diligence, anything that's KYC. All these countries do it. So Mexico's regulation, Colombia's regulation, Chile and Peru, which are now regulating online gaming, also have an established AML regulation that ties right back into the casino activity. So all that works on paper. When you step away from the paper and go into reality, Ismail and I were just discussing, you have a whole lot going on in terms of vouchers. Yeah. And Latin America is still, I want to say, banking rates are going up, but a lot of people don't have a bank account, and they would do everything through these little shops. So like, I don't know if you've been to Mexico, but you will see an OXXO in every corner. So these are the places where you would buy your vouchers and you would get your gifts, and obviously that triggers the whole world of potential AML issues. payment methods are both legal and illegal. So obviously the banking system works, but still you have all these difficult or rather shady payment methods that are not keeping up with traceability, are completely anonymous to a certain extent. So that doesn't do a favor. So again, the issue is, on paper it works, it doesn't in reality.
In reality, it doesn't always
And the
work.
stories, I have a lot. So.
To take that offline.
Exactly.
Now let's talk about the U.S. We have about 10 minutes left. The U.S. it's a fragmented rollout. Each state has their own rules and regulations. Some states have sports betting and don't have iGaming. Others have both. And then there are also all these other digital gaming businesses. Whose responsibility is it to deal with fraud and AML issues? You have payment providers, you have the government, you have operators. Where does the responsibility lie? Start with you, Warren, and any of the panel can chime in.
Sure. I think it's a collective responsibility. I think everybody has to play their part. So from our perspective, we're a payment service provider. We actually go and enable the actual the payments. And it's really important. People don't necessarily think about payments, but it's the lifeblood. It's crucial. It makes the actual business. It underpins the business. They want to go and have the entertainment, the fun of actually playing the games, but the payments are there. And when they go wrong and they don't work, then everybody knows about it. So it's something which needs to happen seamlessly. It needs to happen efficiently. And it needs to happen in a compliant way. So I think the responsibility is a collective one, and to that end, it's the responsibility of the payment provider to actually go and provide the tools, the technology and services. In fact, I appreciate we don't have much time, but one thing I will call out, I know that in Ontario, the IGO, they went and brought in regulation to actually go and have a look at prepaid cards, thinking that was a risk from an AML perspective. So in order to do that, they've gone and put a restriction of a limit of 5 cards being used within a 7-day period, and $250 as well within a 7-day period. So we've actually gone and helped our operators there to actually go and create some functionality, some bespoke coding to go and mitigate against those risks. So we're actually helping the actual operator. I think fundamentally the merchant, orchestrates it and they control it. But I think it's a collective responsibility, and we all have our part to play, as I just demonstrated with the Ontario scenario.
Thank you, Warren. I think also the point here is that as soon as you get something legalized in any jurisdiction, you get the weight of advertising that's brought in and marketing, but all ships are rising on the same tide, including pirate ships. And what we're having at the moment, the issue we're having right now is that the insanity of not having any kind of iGaming in California just means that all that business is going to crime. So you're giving that business away to crime. Similarly, here in New York, you've only got sports betting and you've got a 51% tax on stakes. It's insane, okay? It's not going to be sustainable in the long run, because what we can see by monitoring New York, which we just started recently, you're giving money away on sports betting, you're giving money away on iGaming, you're giving money away on casino and slots. All that money is going to crime. Now, how that money gets processed, it will be through illegal payment processors who are doing kind of vouchers and cards. And what we found even in the UK is there are systems where they can use Amazon gift vouchers and convert that money into gambling money for children. So when that's going on at a level of a very legal market with many different payment methods, when you're looking at marketplaces in the US where you don't have anything legal, like in California, it's going to create trouble for the payments industry generally.
Yeah. No, I agree with both your perspective, although I agree it's collective, but I'm not sure it's shared in a way that I don't know how much communication there is between the different, I'm going to say stakeholders, for lack of a better term. And then on the government and authorities side, what I usually don't see when there's legalization or regulation, it doesn't necessarily follow through with enforcement of the illegal market. I know it's hard for regulators. They're usually underfunded. They don't have, but that's where the industry should chip in and say, well, we're going to facilitate to actually enforce on the illegal market, especially, again, back to South America, which is what we know best. Markets like Brazil, for example, if it ever legalizes, is it going to be worth their while to get a license for everyone, or would they rather stay in the gray because no one's going to enforce on them? So that's one of the biggest issues.
Jennifer, I want to point to our conversation we had a couple of days ago where, we made a joke that the operators, they obviously don't want money laundering, but money laundering in some senses could be good for business because it just brings more volume, more transactional volume to their operation. And you kind of educated me on the difference between money laundering and fraud. No one wants money laundering, but there are key differences that you highlighted. Can you talk a little bit about that?
Sure, and I think this plays off of what the other panelists have said about who's the key regulator, right? So for money laundering, you have FinCEN, you have sort of a federal overlay, at least in the United States, for money laundering, and then you have gaming regulators, right? And obviously they're sort of parlaying off of the federal regime for money laundering. And you see this play out in, let's say, 2016, when there was a ring called the Jersey Boys. They were coming into Las Vegas with big bags of cash, going to a sports book. The first was raised at the Gaming Control Board in Nevada. They were fined, I think, $5.5 million. Cantor Gaming, at the time it was Cantor Gaming, was fined $5.5 million. And then ultimately FinCEN steps in and fines them $22.5 million for the same violations, but at a federal level. So you have the gaming, but they were a gaming licensee. And what the problem is, I think, with the sort of conflating AML and fraud is for anti-money laundering, that's brought into the casinos are actually treated as banks for purposes of Title 31 in the Bank Secrecy Act. So in America, those casinos are actually treated as banks because they're taking that money in and out, and all the same regulations that would apply to a bank apply to a casino. You don't have that necessarily with online operators, right? So you might have a gaming licensee, again, depending on the jurisdiction, depending on the state. You might have a licensee that's actually in that market and that holds gaming licenses, like Sightline. We hold gaming licenses. We also hold money services business licenses. So we're regulated on both sides, but not all payments processors have that same level of regulation, which means people aren't looking over their shoulders with regard to money laundering in the same way. So for online, it's a very different analysis, quite separately from the incentive for an operator. There's just a different regulatory regime. And so, we need to be a little bit cautious. Like in the case of Ontario, where we were talking about prepaid, you have regulators that are looking at this and saying, okay, we want to make sure that we are preventing money laundering, and we're going to do this in this very specific regulatory way. The problem with that approach is, to what Christina was referencing, when you have people who don't necessarily have a bank account, who are legitimate players who want to engage with your product, but if you have this sort of artificial regulation that's sort of overarching, and then those people are maybe limited in their ability to participate in a market that they would otherwise be engaged in. And so we just have to be very careful in terms of how we call that out, utilizing data to make sure that what we're intending to capture is what we're actually preventing going forward.
Wholeheartedly agree. It really, that's a very crude rule, arguably, to try and tackle anti-money laundering. Not necessarily effective on the fact that it's focusing on one deposit mechanism. You have to think about it in the broader context. It comes back down to the 5 pillars of compliance to really have a proper program in place and supported by a good payments provider like Nuvei, where you can have the appropriate fraud and risk tools. Things like we have a closed-loop cashier for certain deposit methods as well, so that certainly helps. And in fact, just going back to Canada again, conscious that within the payments arena, you can actually deposit via MasterCard, but you can't actually withdraw to your MasterCard within Canada. So straight away, you can't create a closed-loop deposit method there as well. We've just enabled American Express within Canada. You can't actually withdraw out to American Express as well. So you have to look for an alternative deposit method, which is why you have to come back down to looking at the customer due diligence, looking at the tools that you have in place with regards to the levels of money going through, and how do you actually effectively manage that in a sensible manner.
Got it. So we have 1 minute left. I do want to just ask one more question. In December, DraftKings and FanDuel both announced there was a data breach. My research, I discovered that 68,000 DraftKings customer accounts were compromised, resulting in a $300,000 worth of unauthorized transactions. It seems to me like this is the type of thing that the hackers are always a step ahead. Is issue just always going to exist in gaming?
I don't think it has to. I think with the military system that we've built our service off the back of, so YieldSec basically looks at everything in the marketplace, all activity, and we work for all legal stakeholders. We stayed right on top of that, and we move like Mercury to stay ahead of where the hackers are. So in terms of whether you're a legal operator or you're in a legal payment service, we're right next to you. So we're as close as your jugular is how we phrase it.
Like white on rice. Okay, we have 15 seconds left, so let's just give a round of applause to our panelists.